So now we're going to move from really the largest homegrown fintech to the largest fintech that has been incubated inside a bank. And of course, I'm talking about Goldman Sachs and Marcus. So Swati Bhatia, by the way, we did have Stephanie Cohen confirmed, but she unfortunately was not able to travel here from Dallas, where she is now based. So we're delighted that Swati Bhatia has joined us. She is the head of Marcus, and she has a fantastic pedigree from Stripe, PayPal, and Capital One, three of the leading companies in fintech / financial services. She's going to talk about what is coming down the pipe at Marcus. There's been a lot of talk about their new checking accounts. She's going to give us some backstory on that and much more. So please join me in welcoming Swati Bhatia, and Todd Anderson from LendIt will be interviewing her. Okay? You guys coming? Thanks, Swati. Appreciate it.
Thank you.
Okay, thank you, Peter. Welcome, everyone. Welcome, Swati. How are you?
Thank you, Todd. Good.
So Peter just mentioned some pretty impressive fintech names. But I'd like to start with what brought you to Marcus? What brought you to Goldman?
So a little bit of background about me. After working in India for a couple of years in an Indian credit rating agency, I followed my new husband to the US at the turn of the century. Did I just age myself as if my gray hair wasn't giving that away? And landed in Richmond, Virginia, where I joined Capital One, and I stayed for 8+ years, held several roles in product, in credit, and got a chance to start and grow 3 different businesses in credit card space. Then my husband got a job on the West Coast in 2008, and we moved to California. My kids were 4 and 1, so I thought I'll take a year off to settle my young family in California. And cheers to every parent who's taken a step back in their career for the sake of family. And my 1 year became 2 years because I was very picky with what I wanted to do. I said it has to be a technology company. It has to be a product that's making world a better place. And it has to be a company that sees my time off as a strength and not a weakness, because I wasn't going to take steps back. And I joined PayPal. I was hugely inspired by the mission of taking small businesses online and enabling them with payment technology, because I think small businesses are fabric of our economy. I stayed there for 8+ years. Yes, there's something about 8 here. I held several leadership roles in risk, product, and operations. From there, I headed to Stripe as Chief Payments Risk Officer. After Stripe, I got enthralled with the idea of participating in this disruption that's happening in consumer financial services space. And thank you, Chris. Chime had something to do with my enthusiasm. But I wanted to disrupt and also achieve scale. So I made a list of criteria that the company where I want to build this will have. First one was banking charter. So it's possible to innovate beyond user experience and marketing. A balance sheet to back the growth, risk management DNA, so that the company is built not on the back of regulatory arbitrage. A brand name that actually gives the right to play and win in this space. If I started a bank called swatibank.com, no one's coming, I know.
There are a few banks, though, with
I know.
regular names as banks.
I didn't think I could pull it off. And then existing momentum, because it takes really long time to build a bank. And time is now. Breadth of products, because credit, payments, deposits, invest, all of these are needed to build a true relationship with the customer. And there was literally just one company that met all of these criteria for me. And Todd, I can see the thought bubble on your head saying, long list, needy, yes. 80% of our time is spent working, so I am picky and I bet heavily on my convictions, and here I am at Marcus.
So what exactly are you responsible for at Marcus?
We have two self-fulfilling strategies that we are pursuing. One is our proprietary bank, which is branded Marcus, where we want to meet customers' saving, investing, spending, borrowing, and optimizing needs. And we have another business, which is our large partnerships business, because we are strong believers in embedded finance. We think consumers should consume financial products in the ecosystem that they prefer. So large partnerships business is embedding our products in our partners' ecosystem, like Apple Card and now GM Card. And I head the Marcus business.
So let's dive into a little bit of some somewhat recent news, which is the acquisition of GreenSky, and kind of how that fits into the plans more broadly.
Yep. So I said we want to meet customers' saving, investing, spending, and borrowing needs. We see point of sale as a very important need which combines spending and borrowing seamlessly at the time the customer is making a very important purchasing decision. We really like home improvement because, one, we see our balance sheet as our strength in financing really large transactions for the customers. It's a special moment. Home improvement is growing secularly, and customers are homeowners with very strong credit. So we were attracted to home improvement as a space. GreenSky is home improvement leader in lending. Another very important criteria with an acquisition is that you cannot build the business yourself. And GreenSky has built an unparalleled network of 10,000 merchants where they embed their capabilities, which was very attractive to us. From customer acquisition perspective, we get million new customers through GreenSky channel every year. These customers will be embedded in the Marcus ecosystem, will have access to all Marcus products. And we get access to a brilliant team in Atlanta, 1,100 strong. And when you're growing that fast, and that location's very attractive too.
You mentioned another partnership in your intro, which was the GM Rewards Card. Tell us a little bit more about that, how you approach partnerships, and then more generally speaking about the buy, build, partner mentality and kind of how Marcus looks at that when it thinks about new products.
Sure. So large partnerships, I said, are very important to our overall approach. We look for like-minded partners who obsess about the customer and are future-leaning. Their customers are very loyal to them. So if you think Apple, think GM, that's marquee partnerships and marquee brands where customers are extremely loyal to them. We've built this simple, new, flexible technology platform that allows us to customize the product per the need of the partner. And even though both Apple Card and GM Card are powered by Goldman Sachs Bank USA, they're very different products. So that's our approach to partnerships, like-minded partners, customer-obsessed, loyalty, and we build a different kind of product for them. We also don't see these as co-branded cards. We see our partnerships as multi-product partnerships. Imagine payments being done in cars, right? So that's the kind of future we want to work together with our partners on. My GM Reward Card is very new product, and it's amazing for GM loyal customers. It's 7x reward on any purchases made in GM ecosystem, no fee, 4x points in other places, so very much built for GM customers. What approach do we take to build, buy, partner? We believe that it's a combination of all of these that is needed to build the breadth of products that the customers want and are asking us for.
So you mentioned a couple times through some answers here, savings, invest, lending, insights. Is there a kind of broader thinking behind the evolution of when to launch these products? It's all right, there's a new product idea, let's make an acquisition, let's build it ourselves. But does the order at which these specific products have been released have more of a broader strategy to it?
I can't take credit for what has been built, but I can tell you the story of how it got built. Goldman Sachs recognized this disruption in financial services 5-6 years ago. And there are two criteria, I think, that have to be met for a business to emerge out of an idea. The first is there a real customer need? And second is there something that you can bring to table that's unique, that allows you to solve that problem uniquely, and maybe even win while solving that problem? And so Goldman Sachs team talked to 10,000 consumers and identified that lending is a space which is getting disrupted. Lending technology in 2016 was changing the shape of the lending landscape. And Goldman Sachs felt that the balance sheet strength, the risk management DNA, and customer centricity is something that they can bring to bear and solve some of the problems like confusing terms, hidden fees, etc. So built the first product, which was personal loans, and was loved by the customers. In fact, we heard this morning that we won J.D. Power 2022 highest customer satisfaction score. So loans product, thank you, hard work that the team did. So loans was the first product. From there, deposits became the second product. Makes sense from asset side, liability side, both sides of the balance sheet, meeting customers' saving need now in addition to borrowing needs. And we differentiated that product by giving excellent service while providing strong financial value to the customers. We brought Goldman Sachs service to customers and a very easy digital experience. So that became the second product. From their acquisition of Clarity Money, a small startup gave us foundation to build a product called Marcus Insights, which was now helping customers manage their financial life. So saving, borrowing, managing. We then built Apple Card without a single line of card code written, built completely from scratch to build a different kind of a credit card. And then we kept growing the products within the saving and borrowing buckets. We introduced CDs. We moved to UK with the deposits product. We entered into partnership with Amazon and Walmart for seller financing. We built a digital point of sale product called Marcus Pay. And most recently, we launched Marcus Invest, which was now customers saying, Goldman Sachs expertise in investing, we want to have access to that. So we built Marcus Invest as a product, then Green Sky acquisition, added to the borrowing portfolio, and now checking, which brings all of this together.
We'll get to checking in a minute, but first on Invest, there's a lot of investment apps out there.
Yep.
So why launch a product in such a crowded market, and what makes the Marcus version differentiated, better than, say, what many other either fintechs or other financial services firms are doing?
Go back to the two things I said. Is there a real need to be met? And do you have something to bring to the table? Real need to be met, what we heard our customers say was there's too much choice. We want to do long-term investing, and we don't know how to choose. And what do we bring to table? It was, again, customer feedback to say, Goldman Sachs knows a thing or two about investing and wealth building, and we want access to that expertise. So it was a combination of the two that inspired us to build investing as a product for our customers. It's version 1 of itself, but customers really like it. We find that 40% of the customers have set a recurring deposit into their Invest account. 70% of them also have a savings account. And a third choose Goldman Sachs Smart Beta, which is a combination of Goldman Sachs products as a portfolio. This is long-term investing portfolios. There's nothing robo about it, and that's the differentiation, right?
Okay.
This is actually built by investment strategy group. It's the same people who build investing strategies for institutions, corporates, and wealthy clients. So we are trying to democratize Goldman Sachs investing expertise through this product. We now know that the customers are saying, we want to reflect our value system in our investing. And we have work to do. We're going to bring more to market, and we'll keep working till we feel like we've truly met the customer need.
Now on to checking. And obviously there was a lot of at least good publicity around the checking launch, or at least checking intention. I know that there's a beta product out right now, but what makes checking so important to the customer journey? And does the launch of a checking account really tie the other products that we've been discussing for the first few minutes here, does it tie them all together?
Checking is a very important part of customers' financial journey. It's an account where they manage their day-to-day from there. And we strongly believe that day-to-day decisions do have significant impact on someone's long-term financial picture. So definitely checking is an important product that customers interact with. How does it work for us in the entire scheme of products is checking creates frequency of interaction. Mm-hmm. Frequency of interaction creates engagement, and engagement is crucial for building trust. Trust, if I define it as competence, reliability, and care, that the customer needs to see that you actually bring all three to the table, it has to start with frequency. So for us, it's a matter of pride that our customers started asking us, can I have an ATM card attached to my savings account? Can I bring in my paycheck into the savings account? And so they pushed us to deliver checking, and we're going to do that soon.
Does it change the relationship when someone deposits their paycheck into a checking account versus if they just had an invest account or took out a loan for a home improvement or debt consolidation? Does the fact that they open a checking account, deposit their paycheck every 2 weeks, does it change the relationship with Marcus now, or are they seen as a similar customer as if they were using some of the other products?
When it was branch banking, branches had the loyalty of the customer. Mm-hmm. You walked into a branch for transactional interaction, and you walked into a branch for something more engaging. In the current schema, customers' interaction with their financial institutions has become very fragmented. We asked a question to the customers, which is, which financial institution is your partner in your financial success? And 74% customers said no financial institution, and they all have bank accounts. 1% named their financial advisor, and 24% had an array of an answer. Some found their credit card to be their primary account, some mentioned their trading platform, and some mentioned their wallet as their primary financial institution. So we believe that checking is important because it creates, like I said, frequency, interaction, engagement, and becomes basis of a relationship. Paycheck is important because that means more frequent interactions, but that's not it. What we are working towards is truly becoming our customers' partner in their financial success. And we bring more than convenience of a digital experience, instead bring ability to make informed financial decisions in their life. So I would say checking is key. It's not it. Paycheck is good, but it doesn't define primacy. At least that's the bar we are holding for ourselves.
Is it more that you're bringing financial services to where the customer is versus, like you said, with the branch? Because ultimately it seems as if people are now choosing a type of lifestyle or type of life they want to lead, and they're fitting financial services or fitting a job to that lifestyle, versus in the past it was branch banking, or you had a 9-to-5 job, and then you have to figure out kind of how to have a life around those things. But it seems as if it's now flipped on its head, and people are saying, okay, this is how I want to live. Now let me find the financial services firm, let me find the job that fits that way I want to live.
That's one of those brilliant questions where the answer is in the question.
So yes.
Yes. We think the customers are demanding and they deserve consuming financial services where they are. And which is why our strategy to be the bank if they want to come to us, and embed our products in our partners' ecosystem if that's where they want to consume financial services. So yes, customers will pick the winner based on who brings them financial value, who is wherever they are, and who actually gives them the ability to control their financial life.
How important is it for the broader ecosystem? I mean, we just heard Chris Britt from Chime, obviously a huge success story, and now you have you come on stage with Marcus and Goldman. How important is it for the ecosystem to have those success stories, not only in fintechs that have grown up from the ground up, but also inside large, old institutions that are now innovating as well?
So a friend, mentor, author, Roger Martin, talks about this concept of flattening technologies, which a flattening technology is a thing which sits on top of existing ecosystem, and all semblance of competitive advantage disappears if you don't adopt this flattening technology. And what's happening in banking is this technification. Todd, I can see the thought bubble. Is that a word? I think it's a word. I like it.
It is today.
I like the sound of it, and I like it more than digitization, because I don't know if digital will be the form factor in which banking will be consumed. I think what's happening with banking is if incumbents don't embrace this technification, all existing competitive advantage disappears. So where we are headed is absolutely going to be a function of who embraces it.
So
and success stories are important, yes.
We have just a minute or two left, but what's next for Marcus?
We are integrating Green Sky. We have now acquired this ecosystem of sellers. We are vested in making these sellers successful. We have a seller financing product, but we want to serve the seller ecosystem as well. I told you my personal passion is also small businesses they are the fabric of our economy. Checking is still in employee beta, hasn't gone out yet. And we will keep working towards building products so that customers truly see us as their trustworthy partner and come to us for advice. They actually think of us first whenever they have a financial question about their life. I started making extra money. What should I do with it? I just had a child. What should I do? I just lost my job. What should I do? So we want to get to that place where we truly are.
I just made a lot of money in crypto. What do I do?
Yeah, come to us.
Well, Swati,
talk to me in the back.
Okay. Swati, thank you very much. Great to have you here. Thank you to the audience for listening.
Thank you everyone for having us here.
Thank you.